Hey folks, Frank Zorrilla here, Zor Capital. The 28th of April, 4:45 Eastern Time. Let's take a look at the market, right? Market was looking extremely weak last week, right? Facebook numbers came out, Meta came out, and the market was looking extremely vulnerable. And then the following day, Microsoft and Google saved the day. They literally did. Because the market was looking like it was going to break down. We've been tracking Bitcoin. I think Bitcoin has been leaving clues. I think Bitcoin is the leader here. It looks extremely vulnerable, and I think even on Thursday when the market had a bounce, Bitcoin actually traded higher. Was the first one to move higher, and I think the S&P follow afterwards. So I'm talking about right over here when it was looking extremely vulnerable. Where is it? This is a 30-minute chart of Bitcoin right over here. Is it here? Let me check. It was one of these. Oh, actually right over here. Thursday the 25th, right around 3:30 p.m. You see Bitcoin here is looking extremely vulnerable. It's looking like it wants to break down, and then it starts to rally right over here Thursday the 25th, right around 3 p.m., 3:30, right? If we take a look at the S&P 500 right around that same time frame. Let me see if I can make this a little bit bigger. Okay. If we take a look at the S&P 500 right around Thursday, 3:30 p.m. Right over here, Bitcoin starts to move higher. This follows right with it, right? But on the daily chart, Bitcoin looks vulnerable. The S&P 500 is a 30-minute chart. Normally, what we see is the market is in a very nice uptrend. These moving averages are, trending higher, and then we finally get the break. We break the 5-day moving average, and then those moving averages, they start to act as resistance. As we start to bottom, what we normally tend to see at the end of that correction is we normally see an inverse head and shoulders pattern. You can say this is a shoulder ahead, and this is the other shoulder. You can see here these moving averages are starting to flatten out and actually curl higher. Normally the 5-day moving average will start acting as support, and what you normally see is you see a gap higher above the 5-day moving average, and then you see a retest normally with a gap down, and then what you want to do is you want to buy that first candle that goes to the previous candle high. That still might be a possibility, but this market has been a market, over the last few years where we get these V rallies and we don't get any type of sideways action. We go from, risk off to risk on almost immediately. That can still happen. We have Amazon that reports this week along with Apple. Those are two market moving reports. So we got to take it day by day here. I would love to see some back and filling here. I would love to see a bigger correction, but that's not, who knows if that's in the cards. And that's the reason why I think it's important that you own these ETFs, specifically the SPY and the Qs, as core holdings, right? So that way, when we get this correction, yes, you wish you didn't own them, but then when we get these rallies, at least you're going to participate. And if you take a look at the market, the S&P 500 specifically, over time, this is the reason why I kind of like laugh inside when people say, oh, the last time this happened, the S&P was up 6 months later. If the summer comes after spring, the S&P is up always 6 months. Listen to me. The S&P 500, the longer your time frame, the higher your chances are that you're going to make money, right? So that's the reason why sometimes I laugh at some of these things. Oh, during election year, we're down, for the first 2 months, we're going to end up higher. The market over time goes higher. So any time that you start to, make that time frame longer than a few days, The market itself, not stocks, not individual stocks, the market itself, the S&P 500 is going to trade higher. That's just the bottom line. Stocks are a different story, right? You can, there's certain stocks that go up, they'll never come back up. They go up, they go down, they lose, 90% of their values, whether it's Zoom, Peloton, some of these Teladoc, TDOC, some of those winners, whatever the case may be from 2020, those things are never coming back. But the S&P 500 as a market whole in general, the longer your time frame, the higher the chances that you're going to be in the black. That's just the bottom line. So my suggestion has always been that you hold on to the S&P 500 as a core holding, right? The average inter-year decline for the S&P 500 is 14%. That is normal. That is natural. That is always going to happen. So you be aware of that. So that way, when that happens, you're not making that behavioral mistake and saying, okay, I'm going to sell the S&P 500, okay? So listen, this is a 30-minute chart, okay? You can have a higher high. Here's a low. Here's a higher low. We still have a lot of overhead resistance over here, right around this level, all around this level, right? This is the year-to-day high VWAP. Right over here, this is the year-to-day VWAP. If we take a look at the QQQs, very similar situation. A lot of resistance right over here, right around this level, 434, 435. We have the year-to-date VWAP, which is right over here. So listen, this looks great as a shorting opportunity. We get over here, and then you take the first candle and you short it, but that's not the way the market's been trading lately. So we're just going to have to play it day by day. If we take a look at the S&P 500 and on a daily basis, it doesn't look great, right? This 21-day moving average is right over here. We got above it on Friday, and then we kind of like closed right at it. At the close, we had a little sell-off at the end of the day. We have this year-to-date VWAP. We have the 50-day moving average right up here. It doesn't look great to go long, but this market, listen, I wouldn't be surprised if it gaps up, right? And if it gaps up and you want to get involved, you can go all in and then put a stop here at this low 505.70. You take a look at the QQQs, very similar situation. We got this box right over here, traded sideways since the end of February. We finally broke down some big bars and some heavy volume right over here. We're back to that level, which is that 434 level. This is the year-to-date high anchor VWAP right over here. We are trading below. Are we not? We're actually not. We're pretty much right over here at the year-to-date VWAP, and we stalled right there. We are still underneath the 21-day moving average. So again, this doesn't look great, but we got to keep an open mind just in case they decide to take them higher. And if we're looking for a bounce, best trade is always the index ETFs, the SPYs and the Qs, right? Because at least you're going to participate. Because if the market goes up, that is the market. As far as individual common stocks are concerned, I took some STTK on Friday, which I put it on the list. Looks great, right? Sideways for the last 3.5 months. Inside day here at the very end of this space. We have a pattern of higher lows here, which is exactly what happens right before the stock breaks out. If you take a look, this is a biotech company. Take a look at the XBI. This thing has been, this is what you call relative strength over a period of 3 months, right? As opposed to just one day. It looks good, right? This is I like this setup, right? Sega, same thing. Bought this one on Friday, put it in the room. Another biotech stock, again, relative strength across the board. Inside day NR7 through the high. You can call this a high tide flag. Stock goes from $5 to $10 a share in a matter of less than 8 weeks. Has a small pullback of about 20%, and it's right here. It looks great, right? We'll see. There's another one that I also put a buy stop in. I don't think I put this one in the room. Is TKO. TKO is the network for WrestleMania. They've recently signed a deal right over here with Netflix where you'll be able to watch all the wrestling on Netflix, right? Happen right over here. I believe here, another major announcement came out here. Stock did well. Again, I bought it through this high, 96.70. I'm not sure if I put it in the room, but again, it's showing relative strength. We'll see what happens. Besides that, look, I own the index ETF. So the market goes up, I'm going to be involved. But if you don't own the index ETFs, go to the YouTube channel and punch up holding ETFs or core holdings. I'll put it in the room as well. And you're going to want to consider that, because there's certain times where, again, the market was vulnerable right over here. I mean, it looked horrible. I mean, it was a perfect textbook short setup, okay? And we were short. We were long those inverse ETFs. We get this, down 3 days in a row. We get extended to the downside. We have a weak bounce. And then right over here, we go through this low, and it looks like, hey, all hell's going to break loose. Meta, Facebook comes out with the numbers, not great. But then the next day, we get the Google and the Microsoft, and everything reverses. This is a great opportunity for the bears to press their shorts, and it just didn't work out, okay? So we're going to have to take a day-by-day basis here. Day by day. This looks to me like a textbook short setup, but these things have not worked in a very long time. I normally, when the market is somewhat in a correction, I tend to focus more on the 30-minute charts. We had a trade the other day on the SMH, which was now 6 candles in a row. It broke that pattern by going to the previous candle high. We had a quick day trade. Those things, those are things that I tend to focus on a little bit more when the market is in a correction. I think the ideal thing for something to happen here would be a pullback to this 5-day moving average right over here. We'll create a higher low, and then we can probably get some energy to move higher. All right. So in the meantime, trading well and be well.